Hi, I'm Veronica from the Centre for Responsible Credit and a former nephew as well. Just sort of picking up what the gentleman just said, we definitely need to get into EU level. At the moment, there's been too much influence just from the banking side. There has been an attempt to set up a finance watch NGO cooperation. As far as I know, that hasn't really, unfortunately, yielded much result. But if we're looking at Basel III agreements and the things proposed, they are so damaging in terms of creating savings banks cultures and destroying existing savings banks cultures that without taking the forum to an international level, we won't stand a chance. And please do sign me up. Thank you.
Okay, this lady here in the platform.
Thank you. My name is Esme. I worked in banking in much of the 80s and some financial regulation in the 90s. But I was not a civil servant. Now, I think it's pleased to hear you're putting in a submission to Vickers, but I think the fundamental point that's got to be taken on board is that most of this crisis came about as a result of Office of Fair Trading actions. And putting an Office of Fair Trading man in charge of the Commission to look into how to put it right is not likely to lead to fundamental change. I mean, specifically, it was the Office of Fair Trading that said it would take the stock exchange to court for restrictive practices unless it got rid of some of the fundamental protections that were actually built in to stop cowboy investment firms. And that led to investment firms stopping being partnerships, in which case the people who were running them were bearing the financial risk, and guess what? They didn't take nearly so many insane risks, and allowing a lot of Americans to come in and finance investment firms, and the rest is history. I mean, the other point is why so many investments, bad investments are sold, bad pensions are sold, is largely to do with the explosion in commissions that financial intermediaries can earn. Who insisted that the fixed commission scale was abolished because it was considered to be an anti-competitive practice? The Office of Fair Trading. Now, I mean, you can't ask those that caused the problem. Yeah, I hasten to add, it wasn't John Vickers. Yeah? It was his predecessors. Yeah. And how much, real, honest, radical reappraisal are you ever going to get from the body that caused the problem? I don't think it's ever, even to this day, admitted publicly it did it.
Okay, this lady here, yeah.
Hello. I'm just going to give 2 points. Coming back on what our Scottish colleague said, I think the key issue is language. We need to build a new narrative around financial markets. We don't have a narrative on progressive sides that can tackle the idea of financial markets or the banking sector. And I mean, because it's such a new phenomenon, the scale of capitalism, of finance-driven capitalism. It's a neoliberal paradigm that defines it. And then the second point is, I work with the Party of European Socialists. So my perspective is European, at least, if not global. And I would like to say any campaign has to have that dimension. And I appeal to anybody in Britain to bear that in mind, knowing that 50% of the financial sector and banking sector is based in London or Jersey. Just to add on another question. And just to say, yes, investment is one key thing, but not to underestimate the ramifications, as you were saying, Lydia, are huge. Today, Greece is on the brink of default. That has nothing to do with investment policy. That's just to give that perspective. Thanks.
Okay, this lady here behind.
Thanks. I just wondered if you work at all with the campaign group Positive Money, because I went to a talk of theirs, and the 2 points that I just remembered that they talked about how to reform the banking system were stopping banks being able to create their own money, because at the moment banks can create digital money, and also legislating to stop banks, for banks to invest a minimum amount, at least, in local businesses, rather than sort of investing in whatever they want, such as like property, which has created that sort of boom in property prices. So I just wondered if you work with them.
Okay, and this gentleman here.
Thank you. Hi there, my name is Michael Shepherd, and I've got a couple of sort of points. I suppose it's a wish list from a user perspective, because I've now reached an age where pension is, I have to take decisions. And the first decision I had to take concerned the annuity which you're forced to buy. After some consultation and research on the internet, I could not find an ethical internet provider. Maybe my research was faulty. It's clicked in now. Maybe my research was faulty, but I could not identify an ethical annuity provider, and I would have loved to have found that. There's another pot of money which is sitting in there, an ISA making the Halifax a lot of money, and I would also like to put that money into something old-fashioned that has been almost wiped off the map, which is a building society which invests my money in such a way that they re-lend it to people like my son and daughter who want to buy a house. And I would love small-scale building societies to come back on the map if there was some way that that could happen.
Okay, this gentleman here. Yes, this gentleman here.
I'm happy to defer to my friend.
We'll come to you next.
My name is John Courtnidge. I'm a banker. And there's my bank shareholding card. I'm a member of the Co-op Group, which partly owns the Cooperative Bank. The last question talked about building societies. The Cooperative Building Society is now called Nationwide. The Co-op Bank is merging with the Britannia Building Society, and by July, August, you'll have co-op banks on every high street.
And an annuity?
Go in and ask the Britannia. I'm not that versed with annuities, but the people at the Co-op Bank and the Britannia Building Society will help you.
Thank you.
I'm standing up because I'm a Quaker, and then I get wobbly and I'll sit down. So the three panellists, it's great to have an all-women's panellist group. I'm delighted to see that. I encourage you to become members of the Cooperative Women's Guild. My second suggestion is that you look at interestfreemoney.org. There's a book list. There are paid livable income for everybody, a citizen's income. I'll finish by simply saying I've finished.
Good, thank you. We're going to go to this gentleman here, and then I'm afraid, the gentleman here, and then I'm afraid that we're going to have to stop there.
I too was going to ask about Positive Money and whether or not they were part of the Good Banking Commission, and also to seek some clarification as to what your views were in relation to the creation of new money within the economy, and what role the state should have in the creation of new money, which is largely digital money, as someone else has said. I think only 3% of the money in circulation is actually backed by cash or notes. Perhaps you could elaborate on the role of the state in money supply.
Okay, I'm going to ask our speakers now. I'm going to carry on this session for another 5 minutes, so if our speakers could be reasonably succinct, maybe about 2 minutes each to come back on points. I would actually like to come back on one point, if I may, and that is around this argument about global versus national action. And I think in our campaigning in the months ahead, on that point, and I agree that yes, of course, we need global action, particularly in a globalized world. But I also think that we have to be very, very careful here not to play into into the banking lobby's hands, because this is an argument that they use, to fudge things and stop there being national action here in the UK. They tried to do it on the one-off tax on excessive bankers' bonuses. They made the argument that you could couldn't do it here, you know, because banks would go elsewhere, and because you needed global action. So whilst I would agree that, of course, you know, that there is a global context to all of this, and we shouldn't allow the banking lobby to make arguments against our government taking action here, and use that as a fig leaf for not doing anything. And you know, I think actually the UK could lead the way here. You know, if we separated retail and investment banking here, you know, we could lead the way. And actually, when the last government did impose the one-off tax on bankers' bonuses, you know, Germany, France, and other countries in Europe also followed suit. So I think we need to bear that in mind when we're campaigning in the months ahead.
I absolutely agree with everything you've said.
Thank you.
Okay, I'll first of all talk about, because a couple of people mentioned Positive Money and their campaign. At NEF, we actually do quite a lot of work with Positive Money. In fact, one of my colleagues is, his main mandate is specifically to look at monetary reform. In case any of you aren't familiar with the campaign, essentially the point that they make is that whilst we all might have the nice rosy idea that pound sterling is created by the Bank of England and the Royal Mint, actually only 3% of pound sterling is. The other 97% is created in electronic format by banks through the process of lending. And banks make an enormous amount of money out of this because obviously they're charging interest on this new money because they're creating it via loans. So I've got, I mean, this is quite an old estimate, but an estimate back from 1999 put this this earning the banks like £21 billion per year. So this really is an enormously profitable privilege that they currently have, and it's one that, in our view, we believe that the profiting from making pound sterling should be a privilege that lies exclusively with the British state. So, I mean, I've only got 2 minutes, so I don't want to talk more about that there. But if you're interested in monetary reform, you want to know more, or you want to get involved, please do drop us an email at NEF, because we're very involved in that. A couple of other questions that were raised. Someone talked about the post office bank and Vickers' view on all these sort of alternative proposals that have been set out over time. Vickers don't address that at all. They don't even, they don't even fleetingly address it. So the idea that there should be alternative financial institutions, the idea that we should properly tackle financial exclusion, any of those things just are not mentioned at all. And that's one of our main criticisms that we put forward in our new submission.
No, I'm sorry, we don't have time, Stephen. No, Stephen, we don't have time. Lydia.
Sorry. So that is something we are trying to flag. Someone else talked about all these arguments that are put forward about economies of scale and the idea that we need these massive banks in order for them to, have the efficiencies to be able to provide cheap services. Well, economies of scale are definitely true up to a point, but you can sort of go beyond a tipping point where they start becoming a negative thing and they start impairing on competition. So, for example, does Lloyds really need to have 30% of the current account market in order to enjoy economies of scale? I mean, I think that's excessive. Someone else said, can we rely on just having very high capital thresholds? I mean, whilst I'm in favour of high capital thresholds, I think the danger is that they're a bit of a distraction from more fundamental reform, because they're what's called pro-cyclical, which means when you assess the risk, you essentially assess the risk of the assets in a bank's portfolio. And obviously, that's based on doing things like marking them to market, which means if you're in a boom, everything's going to look all rosy and you're going to think your assets are wonderful, and then the second you realize that it was a bubble and everything collapses, you suddenly realize you don't have anywhere near the assets you had at all. So there are fundamental problems with capital adequacy requirements. Furthermore, I would say that a lot of banks are actually allowed to do this entirely independently and all their own sort of risk weight assessments. And so when you actually look over time, over the past 10 years, you see they're expanding their balance sheets massively over the past 10 years, but their so-called risk-weighted